Hello everyone, welcome to today's live stream with fundamental analysis and stuff. Oh, screen's in the way even. But there we go. So hope you guys are having a fantastic day. Hope you're having a good day. Other than that, let's go. So what is kind of important right now? So Mr. FOMC had a discussion over the Friday, and he said that basically that. But what is really happening here is we need to get inflation down, and he said that the what was welcomed was the new tariff, the new inflation that was lower, but nothing else that more than that. So for us, it's really important for us to be for us to be in line with what he said, and he said nothing more than they want to curb inflation, and that's that. So let's go through that, and then we will go through more fundamental analysis and news over the course of this webinar. If you want to have me cover some specific pairs, that is totally up to you if you want to, but that will be towards the end of it. All right, good. I just checked my sound. Sound is good. Then let's rock on, mate. All right. So where do we start? We start with Mr. Powell, and what Powell said last week was that the inflation is too high. Now, what does this really mean for the market? That we are still very high, so they're not going to back down. They are not really going to be like, well, what do we do, mate? What can we do here? No, not really. So the thing is that important to understand the tone of what he said, how he said it, and he said it in a way that scared the market. The market got scared on Friday, as you may have seen the dollar rising, and we saw the yen rising, and then we saw that S&P came down pretty hard. That this is hardcore, and then you're wondering, woohoo, and then you're wondering that what are you going to do with that piece of information? Well, nothing more than that you're going to see that this is how the Fed expectations of Fed is going to move the market in the coming days and weeks and months and everything like that. So take that into account. So we can see S&P 500 but literally just fell to the ground. Nasdaq fell to the ground. Dollar rose, but it's now pulling back. Why is dollar pulling back, and why is yen pulling back? There was something yesterday that was really interesting, and my good friend okay, cool. So my good friend Joe came out yesterday, and he said that, bro, look at what the Bank of Japan is saying. So I looked at it and I'm like, Bank of Japan says that they see inflation coming in at 2 or 3% by the end of the year. What do you think is going to happen to the market if we're going to see that coming in at 2 to 3%? What's going to happen to yen? Where's it going to go? Where is this going to go? So that would mean what? Higher yen? That's what I was thinking yesterday, and I was literally not definitely shooting. I wasn't literally looking to what it has happened in my pants, but I was shaken. I was definitely shaken. So that was very spooky. What would the market do in that situation? Because I thought, well, that will be strengthening, wouldn't it? Apparently not. The other thing that Mr. Joe told me yesterday, that Bank of Japan also said that wasn't the other one. No, okay, it was just my the other one. So that was like, wow, check out these squawks, and I literally was like, hallelujah, Jesus Maria, and all of his company friends, can you please help me? Don't fall now, please don't fall now. Dollar yen pairs don't fall now. And I literally looked, the market opened, and what did the market open do, you might ask? Well, the market opened with a gap. New Zealand yen opened with a gap to the downside. Now, that, my friend, is how we talk about, having a bit of luck. So that would be that one there, yeah. So it started off a bit lower than I would expect. We've risen yet. Thank you. So this is important, fundamental information. So how is that going to lead us moving our yen bias for the future? Well, I'm actually surprised that the market actually took it the opposite of what I would think. So I think this is good. This is good for us. Yen fell, so party like a rock star. Okay, let's move on. Fed futures shows 75 basis point rate hike is now at 70 basis points. So if you go to Mr. CME group and the watch tool, is it really true? Is the market actually, is the news actually saying things correctly? And then we're all seeing so 250. So this is now turned down to 66. So yeah, ish. But it's still a 100% rate hike chance. It's just the difference between 50 and 75 for September. September 21st. That is 23 or 4 days ago until. Okay, so the other thing is, if it's less than that, my head math is what it is. By the end of the year, they believe, markets believe we should be somewhere between 350 and 400 or 4%. Interest rate by the end of the year. But if we go to May 2023, the highest chance we're going to be above around 375 to 400. But if you go to June next year, this is starting to appear. They're starting to appear that the market is pricing in a 28 and a 10 and a 2% for a lower rate hike than what they're currently pricing in for the mid-year. Now that is important. Why would you think so? Because that is the market saying, hello, we might be falling. Interest rate meaning recession coming in. So the market is already pricing that in, and it already shows here. So, just mentioning to you, no hate, no love, other than that is how you can see what the market is pricing in for the future, and it isn't hocus pocus filiokus other than other yokus, right? So, ECB. We expect a 75 basis point rate hike for next week. I think the last one I remember seeing was 50. So why do you think euro is rising today? Do you think that has anything to do with it? At all? It has everything to do with it. That is why euro yen is today rising. And it has risen so fast, I couldn't even catch it. I've been out and about the whole day, and I feel so angry about myself that I didn't buy just blindly here, 25th or 20th or 24th or something. But if I bought it 20th, I would be having a loss of around 200 pips. So, yeah. But I definitely should have bought it there. I definitely should have bought it yesterday. Now, that is that. But nevertheless. So, I want to go back to the key takes away. We're now expecting 75 basis points for September, 50 in October, and 25 in December. ECB is ready to fight inflation at all costs, even the risk of a deeper recession and higher employment. In the light of the numerous hawkish comments and stories during the weekend, we now call for a change to our ECB rate hike. We expect now that they expect that. Okay. As regards to reinvestment schedule, we currently do not foresee that ECB will change it, but increase market and ECB focus in coming month will intensify the discussions ahead of December. We believe our euro area phase will face a recession and ECB will hike into it. However, we acknowledge that even without ECB tightening, the European Union economy was in a severe situation to begin with a worsening energy crisis. Now, generally, people, what can we think? Where can we think? How can we think? And in what universe? How do we think that the energy crisis is pricing into inflation in Europe? So if you go to Google, you will say that energy in inflation in Europe, I guess, something like that. So the percentage, that is not percentage, I don't know, where's percentage on my keyboard? There you go. Percentage of energy, and how much is that? And I don't know at the moment, but I would guess it's somewhere between 10 to 20% of it. That's a guesstimate of the reason. Now, have we seen nat gas lately, people? It went up to 10. If you have seen oil lately, it was at 100, and I can't find oil right now for some reason. It is currently at 94. Now, that is elevated prices. That is being baked into the economy. And where does energy come in? Energy comes in as a very important factor for anything you do in an economy. So, other than that, I think that we need to be cautious about the future of Europe, because if the European era cannot sustain itself with the current prices that has been provided to the communities, if they're not able to buy things anymore, if everyone is being thrown off to the streets, if everyone needs to rethink how they spend, if people are going to freeze to death now in the winter, we are definitely going to have an economic downturn in Europe. Now, the question that we all need to ask ourselves: how bad, how deep, and how intense is it going to be? Now, if we go over to the COT to see, I think I have been buying boxers in lately. Harold. That's what I got instead. Well, anyone wants 30% off. Thank you, sir. Yeah, thank you. So, but let's go to COT. I haven't looked at this COT for quite some time now, actually, to be honest. So let's go to COT. And then we go to gold and silver, because that's what you guys want to see, right? And then we go to oil. Cool. So start off with Aussie. 3 and 3. So still, generally the market is very short Aussie, give or take, mostly. British pound, they are somewhere still short 60-40, and there is more longs coming in. Okay, fair enough, okay. Canadian, more shorts coming in because of the potential for or lower prices and lower economic pricing, and also less in oil. Euro has lots of buys, lots of sellers coming in. What does that mean? that means that the buyers believe that the recession that is about to come in Europe, or is in Europe, is less than what we have been pricing in so far. So, if that is going to be if that's what they think, then they are going to add longs to this. And generally, the market is pretty 50-50, give or take. So, nothing more than that. Japanese shorts coming in. Aha! I told you! Dollar, nothing new. And New Zealand, nothing new. And gold. Shorts was last week. If you look at gold, can you see that there's a lot of shorts last week? Yeah, there was a lot of shorts last week. You can see it here. It fell. It fell. And silver, same story. But why? Why would people cover their shorts last week on oil, you might ask? Why would people cover their shorts on oil last week? Though I wasn't any good at that. Is there anything to defend that? We bottomed out at 86. Is there anything on the monthly that would tell us that? No, not really, just S1. Okay. So that was the sell. So other than that, good night. Good day, good night. So let's go over here as well. The Eurozone moneymakers are pricing a 67% chance of 75 basis points, up 48. There was something here. What was it? The European Union are preparing the power market for emergency intervention. Is that good or is that bad? What do you think? What do you think the market makers will think in that situation? What will they do? Will they increase price or will they decrease price? And to be honest with you, what is likely to happen next is actually sending the price higher, because now the government will pay for whatever they're doing. The question is in Norway is that the government is owning it. The companies that runs the producer companies. So, okay, there goes the government. Mostly. I don't know about Europe. I know that in Britain there's a lot of private companies. So, who's going to win the game? If the market, that's what happened during COVID, right? So, a lot of money to the market. What happened to the market? Well, went high. The other things that is important to note is where are we now fundamentally, like the whole universe fundamentally. The whole universe fundamentally, what I see right now, I might be wrong. You can tell me if I'm wrong or right, but I will listen if you tell me I'm wrong. So what I see right now, we have seen increase in prices. What we have gone through is a full business cycle, economic cycle in 2 years. Right now we have rising prices, rising indexes. We have the stock market falling. We have price pressure. We have commodities that has gone very high. We are seeing more and more flight to safety, dollar rising. We are seeing, oil kind of stabilized after it falling, but the 10-year T-note is starting to rise again, and a euro that has broken or did break parity, but has paused that, but has been in a bearish trend ever since. Fundamentally, we have central banks that is increasing interest rates at a very fast pace, where 50 to 75 basis points is normal, which is very high. Normal is 25 normally. And so it happens in America, it happens in Europe, It happens. How much did it in the UK? It was probably 50. There is another 50 in New Zealand. And Japan is not rising at all yet. There's even 50 basis points in Switzerland for some reason. So, or for crying out loud. So, other than that, I think that we are trading dollar bullishness. We're trading yen bearishness now, but yen has, that's kind of the different place between Japan and America. We are seeing that the news that we get is negative. There is generally negative news, and there is talk about all this recession, all this bankruptcy. Until we see mass bankruptcy, we can't really act upon, other than we believe there might be, that there is recession ahead of us. And I'll always talk about that we are in the future, but there are already evidence that we are already there. But same thing. So, how are you trading that? How are you thinking of that? How do you acknowledge that? So once you have acknowledged that amount, I'm just going to say, okay, what is happening right now is that you need to make a decision. You make a decision of what you think about the future. Now, that can be just going to be thinking about, like, this is what I have right now. I'm going to trade off what I know right now. Or are you going to trade upon soon that the central bank next year are going to start reducing interest rates? Now, I'm just going to tell you that the market's already pricing this in, and I'm already thinking about it. But there is going to be a moment where the Fed is no longer going to raise interest rates. But until then, dollar's going to rise. But that day and that moment where we have that peak, I'm just going to tell you. So we're going to rise from dollar until that happens. But don't be unprepared for it. I prepared you guys for August for a million times, and now I'm going to prepare you for that. I'm just going to tell you guys for free, right? So, what else do we need to cover today? I wanted to cover, so we did cover that one. You are seeing that, Fed Powell's hawkish speech wiped out the Aussies' gain last week. That's actually pretty true, yeah. So I'm just reading this one as well, and from Westpac. And the next thing that we need to discuss is, how's things going with you? I care about you. I care about your trading. I want you to succeed. I want you to come to me and say, this is what I'm doing. I haven't seen much of that, but I just want to say that I care about you. I miss you. I love you. And we are going to make this work together. Right now, there's a lot of profits coming in today. So I'm really happy about that. But I don't know if everyone is enjoying that. And if you look at this one, for example, the energy crisis is getting worse. There is people suffering out there. I do acknowledge that. But other than, not other than that, but that includes some of you guys as well. So please reach out if you guys need help. I'm here to help you. I need to next time prepare even better. I think I have done some good for you. We have not looked at the markets that much, but what is important right now, what's important next is what is the Fed going to do in September for the Fed meeting. We already have updates of what they're going to do about that. They're going to increase interest rates by 75 basis points. Dollar has been rising ever since. But if there's going to be, and you need to be out of the market by the time FOMC comes around, so whenever things starts moving fast, quickly, you don't lose anything. There's an FP on Friday, meaning this week's market is going to go fast, which it's currently doing. Just make sure you are on the winning side of it and get out whenever you are feeling like this is going to go down the drain anyways. Okay? All right? I love you guys. Love you guys. See you soon. And I'll be streaming in 15